Let's get to them. We have a Tesla fourth quarter adjusted loss of share of 69 cents. This is narrower than the $1.14 that had been expected. The stock initially up 2.4% on this news. Those are the first numbers that I have right now.
Yep.
We'll be watching this. As you see there, the stock now up just 0.5%. 1.5%, yeah.
One note here, crossing your Tesla Model 3 on track for initial production in July. Revenue in the quarter, $2.28 billion. That is also above estimate. So again, although producing a loss in this quarter, Tesla managing to surprise to the upside as it did last quarter. The question is whether the details in here about production and the run rate of that Model 3 are going to be enough.
Right. So the financials, they look like a beat. So 69-cent loss, that's narrower than what had been expected. Q4 revenue, $2.28 billion versus estimates of 2.13. But I think, it's always about what's coming in the future because this company is not priced on what we're seeing right now. And
we are going to have to wait, of course, for details about where Solar City fits into this and outlook for the year as well. So we're still having a look at that.
All right, I want to bring back in Bloomberg News reporter Keith Naughton out of Detroit, Kevin Tynan out of Princeton. Kevin, what do you see as the key thing to look at for Tesla? What's the number one thing that you see the stock potentially moving on here?
Well, I'd like to see the cash burn for the quarter. They had held back on some of that capital investment in the third quarter. They're looking at about $1.8 billion for the year, and through the third quarter, they were about $700 million. So looking for a pretty big number in terms of capital expenditures for the fourth quarter. So we'd like to see where that cash burn winds up being.
And when we look at some of the other numbers crossing here, it looks as though we've got production targets for the Model S, Model X, 47,000 to 50,000 Model S. Does that sound, Keith, like numbers that will satisfy investors?
Yeah, the number that investors are really looking for is what they're going to have of the Model 3, the $35,000 mainstream car that they have coming. That's good news that they say they're still on track to deliver that in July. What Elon had previously promised is that he'd put out 100,000 to 200,000 models this year. They already have advance orders for over 300,000 models. So it's expected to be a hot seller, but there's been concern about delays in production.
Another headline crossing right now, Tesla says it's now considering up to 5 gigafactories. Kevin, is this a surprise? This sounds like a lot more capital outlays, but it also sounds like, good potential that maybe they see it working and there's going to be a lot of demand. Does this headline strike you as something that sort of tells you something about Tesla's future?
Sure, yeah, and I think if you look at what some of the production targets are going forward, 500,000 units in 2018, 1 million by 2020, you need factories, and that takes money. So you can't do it with just the one plant in Fremont. You need more capacity. You're probably also going to need a distribution network. I'm not sure the direct sales model works with 1 million units per year.
So we're seeing here again, crossing from the terminal here, Model 3 and Solar Roof launches are on track for the second half of 2017. Keith, does that sound as though that's what you want to hear, or do you need some more specifics?
That'll be very good news to investors. There's been, as I said, great concern about the Model 3. They want more clarity about Solar City and what it contributes to the bottom line. So both of those would be good news for investors. We still need some numbers on Model 3. As Kevin said, they're projecting 500,000 in production next year for a company that's never produced more than 76,000 cars in a year. So this is a big jump and a big test of Tesla.
Right, Keith, execution risk is seen as a major risk here because they're really ramping up production, all these new products, all this stuff that they're inventing. The stock's obviously been doing very well. Does this suggest that people are coming around to the idea that they're getting it together, that people have confidence that they can do the products and get them out as currently scheduled?
What people have confidence in is Elon Musk. As Brian Johnson said today from Barclays, the stock is trading on the near superhero status of Elon Musk. People think he can do no wrong, that he's the next Steve Jobs. So the stock's up more than 40% since the beginning of December, all on the come, not really on today's performance, but what they expect out of this guy who can, shoot rockets into the air and land them on the ground as he did over the weekend. They believe that everything he says he will do, and for that reason, they see him as the next big thing in automotive.
Kevin, final quick question to you. Is there policy risk associated with Tesla, with the new administration's stance on alternative fuels, renewables? Is that something that investors should be thinking about with this company?
Well, it would be something to think about, but up until now, it hasn't seemed, even the speculation of those issues hasn't seemed to make much of a difference. I think going forward, we've had low gasoline prices. You've seen incredible growth rates in the take rates of Model S and X and huge deposits in the Model 3. So it's really not about gasoline price or the tax credit. It's just about the technology. And as Keith said, it's about the cult of Elon Musk.